This is the Artist Entrepreneur Podcast. We are your hosts, Amanda Ritchie, Noah Dock, and me, Carrie Wee. We're three artists brought together by the love of circus and dance. Amanda from the world of Cirque du Soleil as an aerial soloist. Noah, our academic, and me from the commercial dance world. This is one of the greatest jobs in the world, but it comes with uncertainty. Each episode contains insight on how to pursue art-based businesses. We'll have a variety of guests and have lively weekly Discord. Tune in every week to hear our perspectives on the minefield that is the artist's way of life. So listeners, usually it's myself, Noah, and Amanda, but sometimes because my two co-hosts, they have crazy lives, I bring in guests and we talk about things that are relevant to this population. This is Hannah Cole. She has a business called Sunlight Tax. She has a podcast as well, and her whole business is geared towards artist entrepreneurs, which means it's so on point, and dealing with their financial health, right?
Yes, you got it.
I know. I'm so excited. I've been lucky enough to have a tax guy, basically, my whole professional career, who has walked me through everything and has educated me. And I'm very lucky. He doesn't even take clients anymore. So when I have friends that have questions, I can't even I can't even do it because he's like, I'm booked. I'm booked for the rest of my life. If you're in, you're in. So I'm grateful for that. But I've been, before I did this podcast, I was a dancer only. So I was a commercial dancer in LA, and I rode that lifestyle for 20 some years. And then now I own my own business, which is around this thing called aerial dance in the air, where we're doing silks and lyra and all this stuff. But I was always a freelancer. And, I learned most of it. I'm really curious to know if there's tons of stuff that I could learn from you on top of what I already know. But I brought Hannah on. She's honored us with her presence so that we can learn about how to be financially healthy as artist entrepreneurs. Hannah, if you could introduce yourself, kind of like how you started, what pointed you in this direction.
Yeah, that sounds great.
Yeah, it'd be great.
My name's Hannah Cole. I'm an artist. I'm a painter. So I've been I
love this.
I've been a painter for 21 years. Oh my God. I got my MFA in painting, and when I first started my life as a professional painter, by the way, I'm still one. I didn't start my business and stop being a painter. I'm represented by a gallery. I have my work in museums. I'm a very active artist. But when I first sat down with my dad's accountant, thinking, and here's me thinking oh, I've got this huge grant. I have a residency I'm about to go to. I have a gallery that's courting me. I'm hot shit, right? I sit down with this guy and he goes, so when are you going to get a real job?
Oh, la la, of course.
And I was like, wait a minute. I just felt on my back foot and filled with shame. And all that swagger I'd walked in the door with was suddenly vaporized. And I was like, oh my God, what? So that was a horrifying experience. And then,
did you get a new guy?
Well, first of all, I just did it myself from then on. I didn't actually get a new guy. I was like, I don't even want to risk getting that guy again.
Right.
I did it myself. He missed a $4,000 deduction. I had carefully tracked mileage. I had 2 residencies out west. I lived on the East Coast. And I had 2 residencies. I drove back and forth across the United States, 2 artist residencies.
Wow.
So $4,000 deduction. He just missed it, even though I had carefully tracked it. Because you know what? I realized I didn't count as a real client to him. He certainly charged me real client prices. But I was I had to redo my tax return. It was so
right.
awful.
He thought he was doing you a favor.
He thought he was doing me a favor. Exactly.
Which is not, I have a bad experience too. It's not quite as bad. So, when I was in my early 20s, my mom sent me her guy.
Mm-hmm.
And I want to put the H&R blocks all in one bag. They're so by the book, and they don't see the edges because we don't have, so many people go to them. They have one W-2
mm-hmm.
and they don't have to do all this work.
Yeah.
I don't know if it's laziness or a lack of creativity. I have zero idea what it is, but the difference between...
I have some thoughts.
Yeah. Oh my God. Please give me your thought, because between them and the person that I ended up with was like, yeah, there was a lot of shame involved. And why?
Yeah.
Why? You know?
Unnecessary
Yeah.
punch to the face before you get started.
Yes.
Yeah.
Yeah. So he missed that. And so you taught yourself to do taxes?
Well, I mean, it's a little more complex, like sort of skip to like many phases of my life, had a baby, got, sort of like finances got difficult once I had a baby and was trying to like manage. I just realized like I could not afford childcare. It cost more than our housing.
Yeah.
And so it was like, it's one thing to live on ramen for just yourself, for just consenting adults. It's another thing to bring a child into that. But then I got a day job partly to afford some childcare, like a little bit of studio time. And it was at a design agency in New York City. And I mean, I could tell the long extended version of this story, but long story short, like my boss, who, if you think about it, he's running a design agency. He's had awful experiences with accountants so much. And they might not have been like high grade awful. They were just kind of low grade awful.
Sure.
They treat him like he's some kind of flake because he's creative. Also, like, Carrie, you are a busy woman. I know you know that creative people manage so much. We are so resourceful.
Yeah, we work really hard. We work so hard.
We work so hard, and it's insulting to have somebody not see what a hard worker you are and how resourceful you are and how unbelievably capable. Not only that, but also that like your creative work is bringing joy and connection and these like spiritual experiences to people. I mean, we're the empathy builders of the culture. The world needs us.
I mean, let me tell you how many years in my life. Now, I love my family, but they make me feel like a fuck up.
I'm sorry to hear.
You know what I'm saying? It's also being the Chinese in me.
Yeah.
Because there's only one lane of success in their minds. At least there was.
Yeah.
Maybe I've changed that since then. But you know what I'm saying? It's like, no, we're not messing up. This is a path choice. It's a choice.
Yeah.
And we have to do a lot of learning on our own. And so you had the baby and you all did all that stuff. What was the first steps to you learning the stuff?
Yeah. Well, just to finish that design story. So what ended up happening is I lost my job because my boss, who had this allergy to numbers, not because he was backwards or not smart, but because he'd been frankly just like treated badly by accounting people. He just kind of felt like, I don't like that stuff. So he didn't have bookkeeping, which meant he didn't know if he was actually profitable, right? So he did what a lot of people like us do when we think we might be not doing well enough, but we're not sure. He just would go out and get more work, right? Find bigger contracts. But then ultimately, he's just making that problem worse because he has to fulfill the contracts. He has to hire a bunch of expensive designers.
I see.
And
yes.
He's just getting more underwater every time instead of, when you have the knowledge of what your work is costing you, it like completely changes things. So essentially, like the moment he actually got bookkeeping in place, he instantly saw that he's hemorrhaging money. So within the week, everyone there, we were called into the office one by one and let go. So
wow.
Yeah.
Okay.
So I was out of work with a baby on the way and a toddler at home. It was like not great. So it's like, I guess I'll go back to school for accounting. There's a clear need for this.
Okay, so that's what you did.
That's what I did. I went back to school for accounting. Mm-hmm.
And you are a painter. Does your brain do that easily?
Sure. I'm a smart person. I mean,
there's a proclivity or not, though, right?
I kind of don't believe in that. I just like...
No? Okay.
Because think of how much you do, Carrie. Think of how capable you are. Your skills may or may not be in, like tiny details on a spreadsheet, but I bet you have 1,000 skills that people are like, whoa, your creative mind can do that. And you're like, yeah, in my sleep.
Yeah. My proclivities specifically do not go towards three things. Languages, numbers, and being a musician.
Okay.
Like my brain doesn't work in those ways.
Yeah.
But for sure, if I if I had, started as a dancer and you asked me 10, 20 years ago if I thought I was going to be good at marketing, I would tell you you're crazy. Like, why would I be good at that?
Yeah.
And I'm very good at that now. That's
Same.
my entire MO.
Same.
It's my entire MO. It's like if it's an entrepreneurship, it's a marketing problem.
Yeah. Yeah, I agree.
Yeah.
Yeah.
Yeah. So you learned it.
I learned it. And actually, you know what? Like, I loved it. I was like, there's so much magic in here. I wish every creative person was getting an education in this, because like there's so many things that would be so useful for us. So yeah, that's my whole jam, is I want to bring that information to creative people.
Okay. So if you have a person in front of you who is a creative, let's just say they're me and they have their own, I'm a professional aerial teacher.
Lovely.
And let's just say they didn't have the wonderful person I have. I have Mr. Scott Kimball, shout out, to help me. And I'm just got my random 1099s coming in. Mm-hmm. I get paid Venmo sometimes. Got a couple W-2s from some like films that I did 10 years ago. I got some residuals coming in. The checks say $1.15. Like if they're starting there, and let's just say they're supporting themselves.
Yeah.
But it's just like all this money's coming from different places. Like what do you tell them that they might want to do first to just start laying the groundwork for knowing what's going on and having a plan?
Yeah. Super high level, like the first task, like the task that will just unlock ease in your managing that stuff kind of life, is to have a separate bank account for it. That's all. It doesn't even need to be a business bank account, in quotes, like what your bank calls a business account. It just needs to be a separate account. So it can be like personal checking according to the bank, but you treat it as your business account. That's important.
Okay.
If you do that and then you deposit all the money you make, that dollar, the residuals, all of it goes in that account, and you make your expenses for the business out of that account, that will become the backbone of bookkeeping. You've basically done 80% of the work of your bookkeeping already just by keeping it in one account. And so that unlocks some magic for you. Later down the road, it also unlocks liability magic, where it can help you prove that your business and you are two separate things, which is really nice. If you have an LLC, that step is mandatory. It's no longer optional, but it's a great first step for everyone. So that's thing number one.
Okay.
Thing number two is just to really go way, way, way high level and understand what the sort of tax basics of your situation are. So you want a little quick breakdown?
Sure. Let's do it.
Let's do it. I would pull out my whiteboard if this was fully video, but let's do it for audio.
Okay. Yes.
So what you want to understand is that you, just by making a little bit of freelance income, freelancer, self-employed person is fully considered a business under US tax law. So like you're already in, there's nothing official you need to do. Just the fact of earning a little bit of income 1099 makes you a business. And because of that, and how sort of generous our tax code is towards businesses to encourage economic growth, like for good reason, you get to take expenses. So all the expenses that you incur against that income, you get to take. So let me just for a visual. So if anybody wants to grab this resource off my website, I have a visual guide to tax deductions. I have 9 different versions of this. So there's one for performers and one for visual artists.
So useful.
One for makers. It shows you kind of the language you probably are using to describe what you spend money on in your business. And it shows you how to translate that to the language the IRS uses. This shows you exactly what line it goes on your tax return. So that's really useful.
Look at my eyes, you guys. You can't see them, but my eyebrows are peaked.
So that's at my website, sunlighttax.com. If you click the little button that says deductions guide, that's there. But that is kind of the baseline of what you get to track and deduct. And so what's interesting to know is like you have that right, and it actually saves you a ton of money on your taxes, because although you have to report by law, you have to report all the income you bring in, every single dollar from a 1099, every invoice, every, every class payment from a student, like, like whatever way that you're making your income, you have to report 100% of that. But the equation on your tax return is your income minus expenses equals taxable income for your self-employment. So as long as you're tracking those deductions, which is easy once you have a separate account, because now they're all in there, you only pay tax on your profit. You're only paying tax on what you keep. And I think a lot of people just don't know that basic thing. They feel like they don't understand that the tax law sees them as a business. They think, oh, but I haven't formed an LLC, so I'm not official, or I haven't made a profit yet, so I'm not official. And actually, none of that is true. You're a business the moment you advertise, not the moment you have a profit. Like that comes later because your expenses come first.
And this is across the board in the United States.
This is across the board in the United States. This is when you earn income through self-employment.
Oh my God. Okay.
Yeah.
Okay. Did you have more on that list before I start asking a bazillion questions?
More on the list of just like the overview?
Yeah.
I think that's a pretty good baseline. Well, let me just give one more little detail.
Sure.
That profit. So this gets reported on a part of your tax return that is called the Schedule C. So tax term alert. It's called the Schedule C. The Schedule C just means you have some self-employment income. But for having it, you get the privilege of taking deductions. So go for it. Track all your deductions because it's going to lower the amount of profit that is subject to tax. So the other detail, the Schedule C's secondary job is to calculate your self-employment tax. So it's also important to know that you have this layer of tax. 15.3% of that profit is going to get paid in, you owe to pay to your Medicare and Social Security. And that number is higher than people realize because they only think about federal income tax. They don't think about Medicare, Social Security, because that stuff is automated when you're an employee. So we don't tend to have it in our brain. So those deductions actually save you a lot more money than you even realize, because the tax on your self-employment income often feels a lot higher than you realize, because most of us never got any tax education at all. So that self-employment tax just comes as a like, wait, what? What is this? So, yeah.
They could have skipped calculus for me and did taxes.
So much more.
They should have.
I could not.
They should have.
I could not agree more. You know what I've been saying lately is like, MacArthur people, please, I just want you to know, I just want to put it in the universe that like my personal next project that I want to do, like my heart project, I want to take this book that I just wrote, which is for self-employed people to do their taxes.
What's it called?
It's called Taxes for Humans.
Yeah, I see it on your on your
I want to hire
shelf there.
A really awesome graphic novelist, and I want to work with them to take my book, which is for adults with no experience. So like there's it's very accessible, but I want to take it with a graphic novelist and I want to turn it into a young adult version of the same book and get it into US high schools. Because I think we should teach this in high school.
Oh my God. Well, you're a painter. You don't want to do it yourself?
It probably would take me 2 years of work, if not more, to figure out how to make a great graphic novel. And I do feel like I could skip ahead if I just found one. Yeah.
Okay. So from what you just said, the bottom line, at least for me in my life, what makes me successful with my partnership with my tax guy is that he basically will fire you from his practice if you are not organized.
Oh, that's, you know what?
Yeah.
Okay.
Yeah. He'll be like, this whole like bringing me a bag of receipts in like a Ralph's bag. Mm-hmm. No bueno. So, at least for me, listeners, like we have to be organized, because for you to get these tax deductions, you have to track your tax deductions.
Yep.
And how do you, for the listeners, not necessarily for me, because I've gone through the ringer with this. How do they know what's a tax deductible thing if they're an artist?
That's such a good question. So the IRS rule is anything that is, I'm using air quotes here, ordinary and necessary for your business. So It's very generous. It really is almost everything that you're spending money on in your business. There are a couple little detail-y rules, mostly in the areas that could be abused. They have like special sort of lockdown rules, but kind of good to know they're generous. So anything you get a receipt for, that's probably a little easier and more obvious. Like if I go out and buy a bunch of art supplies, those are deductible and I'm going to get a receipt that's going to show them. So that one's simple. Harder ones could be business mileage, client meals or meals with a business contact, business travel. Actually, professional development expenses are one, like highly recommended. The whole purpose of giving you deductions for your business is to encourage you to invest in it so that it grows. Like I want you to have a growth mindset around this stuff because it actually is really important for protecting your business. But professional development, that stuff is great. You want to get coaching, you want to get some new skills. Certainly your accounting or legal representation, that is deductible for your business, if it's for your business. Yeah. And I think like meals and travel, those are kind of fun to touch on, partly because spiritually, what that's about, why those are deductible for you is because business is relationships, right? And those are how you build relationships. You have a meal with somebody, you buy someone a drink, you maybe travel across the country to meet them in person because it will strengthen your relationship. And that's encouraged. Also, it's fun.
Yeah. Okay, so 2007, I think, I started my S-Corp in California. And I started down this road of education on this stuff. What would your suggestion be? If somebody is a young artist entrepreneur and they're getting started, should they do that or start an LLC right away? Or do you need to have some business coming in before all that? What's your approach on this?
Yeah. So this is like one of my biggest areas of confusion. Like I get the most questions about LLCs, S-Corps, and like startup tasks. So
Sure.
Sort of quick breakdown is to understand that there's an order of operations and some things can and should wait. An S-Corp is one of those things. Do not run out and get an S-Corp right away.
Because it's expensive.
It's expensive. It puts you legally on the hook to be running payroll and to get yourself subject to employment laws in your state if you abuse your employee. So you now have to run payroll for yourself. And the state does not care that your employee is you, right? So a lot of people get loosey-goosey with that and they think, oh, I didn't have the money, I won't pay myself this month. Well, what your state is seeing is you just didn't pay your employee and state employment law will come get you. So like the admin on running payroll is very serious. Like you're legally on the hook. And I've seen ugly, ugly stuff where states come after people for mismanaging payroll, which is required when you have an S-Corp.
Okay.
Also, S-Corps don't make any financial sense until you have like at least X amount of profit. So let yourself get some runway, like wait until you're profitable, then do the cost benefit analysis, maybe once you're making 60K plus.
Okay. So can you break down what DBA is, S-Corp, LLC, and why you'd want to start one of those when?
Yeah.
In the journey of your business.
Yeah. So who comes first? Taxes come first. The IRS has the most broad and generous definition of who gets to count as a business. The way I like to phrase it when I'm teaching is like, Big Mama IRS is here and she loves you and she sees you. Like, you're a business to me, you're a business, you're a business, you're a business. You're all my businesses, right? That's the IRS attitude. So the IRS, if you think about their job, the IRS is the tax collector. It is not looking to say, oh, no, you don't qualify. I'm not interested in collecting your taxes because you haven't solved this mindset hurdle and therefore are not feeling ready to form an LLC. That's very much not the IRS.
Like they'll take it. They'll take everybody's
Yeah,
money.
they're like, we'll take it. No, we see you. We see you already. We have your social security number. We see you. We got your 1099. We got the copy of the 1099. We already know. You might not yet know, but we know that you have a business.
Right.
So IRS is first. It's also important to realize, really important to realize, that you're entitled, like businesses start at a loss. Like that is actually normal. That's not you being broken because it takes money to set up a business, right? So like if you think about a pizzeria, right? That pizzeria cannot make $1 from selling pizzas until they have, like a storefront that they pay rent on, an oven that's installed. The electrician has to come and hook that oven up. They have to hire a baker. They have to get flour and cheese, right? So that pizzeria has to spend all of that money before they can ever open the doors to that restaurant, right? They can't sell one slice, get $1 in the door, but they've spent who knows how much, thousands of dollars getting set up. So you always start negative and work up to becoming positive. And I want to normalize that for everybody listening. So there's a phase in your business called the startup phase. And there is a tax deduction called startup expenses, and you are entitled to them. If you are freelancing, you count. You get to do this. So a lot of people don't even think they count or should report their income or even are in the system until they're profitable. And in fact, they're missing one of the biggest tax deductions they'll ever get, which is startup expenses and losses during the startup phase. So important to know that little detail. Do you want me to carry on?
It's so hard. Yeah. No, I'm like gathering my thoughts. It's so hard. I'm basically in perimenopause and my brain fog takes over, and I like when I'm interviewing people, sometimes I will lose a thought and never comes back, and I'm like searching for it the whole time. So I think that there's a lot of shame around that moment for people. When they're investing so much and they're not getting anything back yet, because obviously like you have to do the marketing, you have to do this and that. And I love that you said that, because it's like, it's a very necessary phase. You can't start anything without starting it.
Yeah. You have to build the business before the business can operate.
Absolutely.
It's like funny how obvious it is once you like say it out loud, and yet we are feeling like we're broken and wrong and we've messed up when like the most obvious thing hasn't happened yet. Like you haven't built your business, so of course it's not making money.
Yeah, absolutely. Okay. Okay, continue.
Okay,
please.
So that's the IRS. That's first. And it really is actually there to give you that massive benefit. Also, just like, let's pause on the benefit. A loss is a benefit to you because you get to report on that Schedule C negative profit. In other words, a loss. So negative profit, your loss, is subtracted off your other taxable income. That's the tax benefit. In other words, if I have a $10,000 loss because I've invested $10,000 in starting up my business, right? But I don't yet have income, but I do have a profit motive. That is the definition of a business to the IRS, profit motive.
Okay.
You're trying to make money. Well, that $10,000 is subtracted off my other taxable income. So if I'm married to someone and I file a joint return, it will take it off our joint income that we're both taxed on. Or if it's just me and I have a day job, it'll subtract it off that income. So it's a huge tax benefit. That's like $3,000 that will be direct deposited right into your bank account as a refund. So it's a really big tax benefit.
Yeah. Okay.
So that's IRS. They start there first, and it starts way before you think it does. You can have negative income. You're still a business. It's all about, do you have a profit motive? Okay, next, we can talk about DBA, which might be the next step. A DBA is just like a filing that says you can operate with another name that's not, so I can run a company called Sunlight Tax. It doesn't have to be a company called Hannah Cole, right? So the DBA just says, basically like you can open an account at a bank. And if I want to accept a check written out to Sunlight Tax, I'm going to have something legal that says I'm the owner of Sunlight Tax. And yes, a check made out to Sunlight Tax actually gets to go in a bank account that I own. So that's the DBA purpose. There may be more, but that is my understanding of a DBA.
And you could just file for that pretty easily. And then now you can, it's just about receiving payment usually,
Pretty
right?
much. It's just allowing you to have a name that's not the name on your birth certificate. Yeah.
Right.
Yeah.
Okay. Okay.
So then next, LLC. Now, an LLC is so confusing to people because people think it's going to have an implication for their taxes. And the funny part is it really does not. An LLC is a legal entity and it's not a tax entity. So an LLC, you can form and you can have any tax status that you want. You can be an LLC nonprofit. You can be an LLC Schedule C individual, freelancer. You can be an LLC S-Corp, an LLC C-Corp, whatever you want to do. You can layer whatever tax status on top of an LLC. So I just want to separate LLCs from taxes. That's the important thing. It's just
And so
legal.
LLC is to protect you from it's to protect you as a person from like being sued, basically.
Yeah, you got it. So the technical things, it puts a liability shield in between you, the person, and you, the business. So Carrie, what remind me your business's name?
Well, my business is called Wrap Your Head Around Silks.
Right. Okay.
And I have, I'm an aerial arts educator.
Yeah.
And then I have podcasts underneath that.
Okay. So if you have an LLC, you may not, you don't have to tell me, but
I have an S-Corp only.
Okay. So if you wanted to have an LLC, then what it would do is it would take Carrie Lee, the human, and it would put a little shield in front of her so that Wrap Your Head Around Silks, we know it belongs to Carrie, but if somebody, falls off the silk, right, and hurts themselves and they sue you, if you didn't have the LLC and they sued you, they could come after all of your assets, including your personal assets, which is where most of your wealth is. So your house, your savings, all that stuff. If you have an LLC, it stops it at the door of your house. So they can take your business assets and, what is that? A podcasting mic, a laptop, maybe some really heavy bolts in the ceiling and some silks. Like it's probably some stuff, but not a crazy huge amount of stuff.
Right.
But it protects your house and your savings. So that's the LLC. It's a liability shield in between those two things.
And do people usually need somebody else, like my tax guy sets these things up for me, to set it up for them? Or what would you suggest people do?
Sure.
For LLC.
So an LLC is a legal entity and therefore it's the realm of a lawyer.
Okay.
I tend to believe in the professional to kind of, mostly what I care about is that they troubleshoot the things that might be a special state rule you should be aware of or some overlap. Like they can flag things that could be of concern to you. And I think that's worth something. There's LegalZoom, there's online things that will do it for cheaper, but they won't necessarily check all those boxes. So, my LLC cost me $750 to form.
Okay.
That was 10 years ago in North Carolina. So
yeah, one time fee.
Yeah, one-time fee. But then to maintain your LLC, there is an annual filing. I think in California it might be $1,000. Here in North Carolina, it's $200.
For my S-Corp, my filing fee is in California is $900 a year.
Okay.
So Texas, it's $0.
Interesting. So states vary. So an LLC, you've got an LLC you form with the Secretary of State of your state. And
okay.
It attaches your social security number to a business EIN. So the state knows this social security number owns this EIN and owns that name, which, for me, Sunlight Tax.
Okay. So let me ask you, what combination of things do you have for your business and why?
Yeah, I have both an LLC and an S corporation. So I am an LLC taxed as an S corporation.
Okay. Why did you choose that route?
Sure. So I have the LLC for the liability shield, which I want. Sometimes in taxes, people they can get upset about money things, or if somebody gets audited, a lot of people who get audited like to blame their accountant. And so I just want to make sure that that border is clear. And then I have formed an S corporation because I make over a threshold of profit where it makes sense and where it saves me money on self-employment tax to use this S corp structure. That's a filing you do with the IRS. The S corp is a tax status. So that's why that exists.
Okay, so tell me why you'd want to have an S corp as a artist entrepreneur.
Sure. So an S corp is it basically sort of shifts the structure of your business to make some of it run through payroll. Like you basically take that. When you're self-employed, you are one person wearing two hats, employee and employer at the same time. The S corp, what it does is it actually kind of splits you back into two parts again. So in an S corp, you have to, this is part of having an S corp, you have to run payroll. So please don't skip the legal obligations there, which are very serious. You have to register with your state as an employer. You have to set up payroll. You have to do all the proper withholding, unemployment insurance, disability, all that stuff you have to do through payroll. But of course, the thing is, there's initial setup that, my hot tip here is get an accountant to do that. It is a professional service that is worth paying for. Right. Don't try to figure that out on your own. But you set that up and you run payroll. So now you pay yourself officially through payroll with proper withholding. You actually withhold Medicare and Social Security, pay into all the things. But then as a boss, the sort of separating part is you now have to pay payroll tax on the earnings of your employee, who is you. So you pay that 7.65% Medicare and Social Security payroll tax, whereas you're also taking out 7.65% of their pay, your pay, to go into Medicare and Social Security. That's what self-employment tax is. It is those two percentages, 7.65% added together. If you add those together, it equals 15.3, and that is self-employment tax. So that's how, over here in self-employment tax, it's one number, and over here it's two numbers that add up to the same thing. But in the S corp, here's where the savings is. You pay that tax, you pay into Medicare and Social Security for only your pay that you run through payroll. The profit you make over and above what you pay yourself is still subject to federal income tax and still subject to state income tax, but it's not subject to self-employment tax, to Medicare and Social Security. So that money saves, 15.3% taxes. The math only maths once you have definitely substantially over $50,000 in profit. And depending on what state, it's very important to check your state because states have different rules where they can sometimes tax back the entire benefit that you get from an S corp. New York, I'm looking at you. So if you're in New York, like people in New York do not form S corporations because their entire benefit gets taxed back. So you put yourself on the hook for doing all the hard stuff and you don't get any benefit from it.
Okay. So what do you see in your practice with other artist entrepreneurs where they trip up the most?
Yeah. I think really, that one we talked about in the beginning, which is why I teach this in my program. So I have a program called Money Bootcamp where I try to price it around the cost of like 1 to 2 months of full service accounting. That is just a lifetime access program. So you kind of get everything, but without an ongoing fee. So I think one of the biggest things is that these setup skills, people don't know. It just feels like a jumble. And also it feels overwhelming that you don't know which one comes first and you don't know what can wait till later. And so just sorting that out, doing a little quick triage in the beginning, I think that's one of the biggest benefits. Yeah. And I also think that people not realizing that they're entitled to take startup expenses and have a loss in the beginning, I think that is probably the number one thing that artist entrepreneurs miss.
Do you think people are people scared to even open the box of their financial health?
I do think sometimes. Yeah. I think it feels like a monster under the bed sometimes.
Yeah. Because they don't know they don't know what's under there, and so they just try to make more money to feed the beast.
Yes. Yes.
And they don't really know what's going on.
Mm-hmm.
Okay, so what advice would you have for my artist entrepreneurs out there? Think dancers, think singers, think aerialists. This type of gig work involves auditioning. It involves a lot of 1099 work.
Mm-hmm.
It involves getting through the slow times. Like,
I hear you.
oh la la.
I hear you.
I'm not as much affected by this now because I'm a professional teacher and I have constant hours at 2 different places, and I have a W-2 coming from one place, 1099. Well, they're paying my corporation on the other end, and I'm in a much more stable position than I always was in my 20s and 30s.
Good.
Yes, but for those people who are not there yet and they are gigging, what are your thoughts for them?
Yeah. First, just a little grace. It's hard. You have a lot of balls in the air. I recognize that can be it could just feel overwhelming. So I really think knowing that all of that gig work can come under one umbrella, one like business to the IRS, that's good to know. And you just want to have some basic tracking. And all you need for that is you just open a separate bank account. Then maybe once a month, maybe once per quarter, depending how much stuff you have coming in and out, just sit down and enter that stuff into a spreadsheet.
When it comes to filing taxes for those gig workers, it is so I feel like there's a lot of minefields. At least people think there's minefields. Is it still true that if you were paid less than $600 by a 1099, you don't have to report it? Is that still the same?
That's not actually true. So you definitely do have to report it. It just means it didn't go over the threshold where you'll get a 1099 for it. So if you do a bunch of gigs and you earn $500 per gig, that's still your reportable income, and the law still requires you to report it. It just means you won't get a 1099.
We won't get a 1099 from the business.
Correct. So the reporting threshold is $600 this year. That's actually going up next year.
Oh my God, why do I not know this?
Honestly, I hear this a lot. I think it's kind of a myth that's perpetuated out there. It's kind of
that if you made less than $600, you don't have to pay tax on it.
Yeah. What it means is it's not reported, but it is reportable.
Oh, I see. So there is a chance that the business didn't report it to the government.
It's not a chance. If you didn't get a 1099, you still have to report it to the government. That's your.
Got it.
The law is clear that is legally required of you, the freelancer. It just means you didn't get a document from the person who paid you.
Okay, I'm so glad I asked that.
Yeah, a lot of people think that. Yeah, but and I want you to watch out because the threshold is going to go up next year for 2026 taxes. So, we're speaking and it's 2026, but taxes are retroactive. So the taxes you're doing now are for 2025. 2026 rules, that threshold is actually going up to $2,500. And I just want to make sure everybody is very, very clear. If you make gig income under that threshold, you still very much have to report it, and you will be nailed if you are caught not reporting it. It would be violating the law. So, the big picture is like the income you earn in your, gig work, you have to fully report whether or not you get that documentation. And if you underreport the number by more than 25%, it's a felony. So,
Oh,
I know.
Okay.
Yeah. So like a little mistake, like you can, they'll send you a letter from the IRS. If they get a 1099 that you failed to report, they'll send an automated letter to you saying, oh, hey, we got this 1099. You owe the tax.
Yeah.
You can pay that and be done. And it's like, it's okay. This happens. But, the IRS is alerted that you didn't report your income. And that's not a great look. You'd prefer not to do that.
Yeah. Yeah. Okay. Okay. Before we end here, is there anything else that you feel like is specific to our artist population when it comes to taxes?
Yeah.
Anything that comes up a lot?
Yeah.
Or or things that we should focus on?
I think, well, let me go into something a little more maybe fun or maybe possibly overlooked, and then go into maybe something more important. So
Okay.
the fun thing is that if you are, for example, a dancer, then you can have a degree of professional development, or professional research that is, sorry, I don't want to say research, professional development that is about just staying current in your field. And so if you get tickets to, Alvin Ailey, because they come to town and you are going to kind of see this one dancer who you might be working with in the future, like that is deductible for you. So some portion of that you can deduct. You should not try to deduct 100%. Whatever is like truly you're doing for entertainment, you have to keep separate. But, maybe 80% of the things you spend money on that way. But this is field specific. So me as a painter, I can't do that. And I am going to see Alvin Ailey this month.
Ooh, that's fun.
I know. I'm so excited. I love that company. But
if you go to an art gallery,
yes,
then that's different.
yes. So my art museum admissions, for sure, are almost always for, like professional development. And a lot of times I'll go into a museum and I'm talking to a curator, like it's a business meeting too. So that's deductible for me. A filmmaker might be able to deduct a portion of their Netflix account, right? But I don't get to, because for me, I'm just watching Heated Rivalry.
I keep on hearing about that show. I haven't watched it yet. I keep on hearing that you have to get on it because it's so hot. Okay. I love this.
Yeah. So in your field, just, stuff that you do to keep current, not all of it, right? But a portion of it is something that you can legitimately use as professional development. The other thing I think for just people to understand is that the tax law sees you as a business. That's really good to understand in your head, because it entitles you to the benefits of a business. And it's like one of the top priorities of the US government is supporting small business. I mean, really and truly, because you grow the economy. So investing in your business, whether that is like joining a program that, a professional development program that gives you new skills or new like business tools, that's an investment in your business that is tax deductible and that will help you grow. So that mindset, I think, is a really good one to get your head around. Those things you pay for, you're looking for a return on that investment.
Okay, I love this. This is also a good reminder for me because tax time is here. How many clients are you actually doing their taxes at tax time?
So I actually don't do taxes for people anymore. I had a tax. Yeah, I don't do it anymore. I sold my tax prep part of my business because my true calling is education. So I love courses. I run a program, like a lifetime access program that just kind of meets every quarter and helps people deal with their quarterly taxes. I have a bookkeeping system that's included in it. So it's like a sort of how to get your systems together program. It's cheerleading and kicking you in the butt at the same time.
Okay. And you're an author and you're a podcaster and all those things.
Yep. So, and I have this book, which I wrote for, those creative weirdos, us like square pegs in round holes who just want to know how to manage our taxes. So it's got a lot of systems. It's a really great book. There's a workbook too. And if you buy it from my website, I also have some free courses that you can get as you buy it so that you can kind of get them instantly. So that I think is really helpful for people. I have like a class on, if you buy the book off my website, I have a class that you get instantly, which is just how to review your tax return. Just like a very simple, it's me with a whiteboard. I draw, so I make it really accessible and friendly. And I'm just drawing here's kind of how it works. This line shows you this number. So it's like very, very low key, not scary. And you get that if you buy the book.
Okay, and where can they find you online? What's the best place to go?
Sunlight Tax. Sunlighttax.com is my website. It's got everything. That visual guide to tax deductions. It's got the book. It's got info on my money bootcamp program for that more like hand-holdy. I need help doing the quarterly taxes. So it's all there. Yeah.
Okay, Hannah, I'm so glad to have met you. Thank you for being on.
Well, thank you so much for serving this group of people, Carrie. I think it's so awesome to have a place to come to like get good information about being an artist entrepreneur. So I think you're doing
and just to hear our complaining, which is what we do most of the time. Complaining about being underemployed and then complaining about being too employed.
Feast or famine.
And the pendulum swinging. Yes, feast or famine. Oh my God, which one are we in? Hannah, I appreciate you. Thank you so much.
So good to talk to you, Carrie. I loved it. Thank you.
Thank you so much for tuning in. You can find Amanda Ritchie at Grounded in Flight on Instagram and at Noah Doc on Instagram, as well as Red Flags app. And me, Carrie Wee, you can find at wrapyourheadaroundsilks.com. Thank you so much for being here. We appreciate you. We have so much more coming at you, including guests that are in this art world, that are blazing their way through new businesses, and just more banter from us. Thank you for listening. This is The Artist Entrepreneur.